What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we have a very special guest, Sara Strat Sniper, in the building. She's here to talk about her 50% rule, and just so excited to have her on the stream. So welcome, Sara.
Thanks for having me on. This is round number 2 for us.
Yes. So the first video we did was mostly focused on the inside and outside bars. We looked at the strat. We talked about different triggers and different things. And this video is really going to bring it all back to Fibonacci and seeing how that can be used as well when playing these bars. So why don't you guys hit me with a 1 right now if you're excited to rock and roll. Let's welcome Sara in with a 1. And I'm going to step right into it right now. All right. So like I said, we had our first video on YouTube. It's on my channel and Sara's channel. So please check that out if you haven't already. That's where we really got a little bit more information about Sara and her background. But today we want to hit the ground running. So let's talk about your 50% rule. So how did you come up with this concept here? And if you could give us a little high level overview, and when did you start thinking about Fibonacci trading? How did that all come together?
So the 50% rule sort of came about. I think I'm almost certain you're the reason why I started using fibs for it, because we all know that outside bars exist, but we didn't really know the best way to play them. And they're very big in the strat community because, we only have the 3 candle types: an inside bar, an outside bar, and then everything else. So with the strat, we use actionable signals for everything, but there wasn't an actionable signal for the outside bar. Like, when do you get in? When do you actually hop in the trade to trade it? And then so when you and I met, because that's how we met, is I saw your charts and all your inside and outside bars, and I was like, wow, we trade so similarly. And you are a fib trader. And I was telling you that it's not enough for me for it to just take out one side of the candle and come back like 25%. I needed more than that. And then that's how we started messing with the fibs. And the only fibs that I use is a 0, a 0.5, and a 1, because I'm really only trying to measure the halfway point of the previous candle.
Yeah. So let's show an example here. I have a chart here. This is SPY, and everything in white. So these white bars are outside bars. So what Sara is referring to here, guys, is it could be any bar before. Particularly for me, I like to use inside bars before my outside bars. But it could be any bar. So you could just look at all these bars before the white bars. So the 50% mark is, let's say we're using this bar as an example, is just halfway through that bar. And the benefit of an outside bar is it breaks the high and the low. So if we, in this case, like we open up here, when we cross through that halfway mark of that green candle, this is what Sara's talking about related to the 50% rule. So that, Sara, when do you use this? Is it on all time frames? Is it particularly for like day trading? Because I have something similar to 50%, but I don't use the 50%. I'll talk about that later. But for now, so how do you determine when you want to use it, what instruments, and what time frames?
Well, so yes, so it is on any time frame. And we use it in conjunction with other time frames a lot. Hold on, I'm trying to find it.
Yeah. You can share too. Whenever you're.
I will. So in the strat's funny because we are in, like, we might not even be at the 50% point yet, but we know to be looking for it to happen. Like, let's see, let me give you an example. I'm going to try and share my screen.
Yeah. All right. So let me stop my screen here. Let's get Sara's up here, guys. Guys, hit me with a 5 if you're ready to rock and roll. I see we have 185 people in here. Thank you so much.
Awesome. I can't see the chat because I'm not into Facebook or in the YouTube channel.
Yes. I'll let you know if there's any questions or anything. So yeah, we can see your charts now. So this is perfect.
Okay. So let me just get to. So I want the daily. Oh man. Sorry, I'm messing with my.
No, take your time. So we have here, guys, what Sarah's trying to show here is some multiple time frame look on these trades, right? And with the 50%, I want you to think about it like this. So if you have, let's say, a green bar like this, so let's replay the actually, I'm not sharing, but you think about it like this. If you have a bar and it goes up the next day, right? Let's say it gaps up. So when we come back within 50% of that previous bar, it basically starts opening a rug pull scenario, right? A rug pull. What's a rug pull? A rug pull is where people's stop losses can start getting hit. We pull the rug and we flush down, right? And it can happen the other way as well. And that's what an outside bar is, because it breaks the high and the low of the previous bar. So that 50% is essentially like, okay, I'm thinking we're going to make an outside bar here. So let's go ahead and start getting in at the 50% mark, which will give you good risk to reward.
Right. Okay. So here is a good example. So I think it was like last Wednesday night, I posted like 5 or 6 tickers, and I said that all of these setups have the potential to go outside week. And what we're looking for, really, like the best scenario is when you have. So you have to know the strat. I know a lot of your fans know the strat, but
Yeah, definitely. We have a lot of people that know the strat. Yep.
yeah, so you want a failed 2. And what a failed 2 is a directional candle. So this candle here is a 2 up, but it's red. So that is considered to be a failed 2 up. And so we always play reversals. So a strat reversal is a 2 up followed by a 2 down. So when I posted this, that's what we love to see. We love to see a red failed 2 up, and vice versa. If you're playing an outside bar to the long side, you want to see a green 2 down. So it's a failure of that candle direction. So they tried to take it up, but it failed. So you have buyers who bought in all throughout here who think that the price is going to continue up. Well, we're always playing against somebody in the losing position. So we want to be in the right position. We want to kick people out of their positions. So anybody who is long in here is already underwater. So then when this day opens, we're going to take it down. And I have this indicator. That's what these orange lines are. It shows the high of the previous week, the middle range. So that's the 50% level, actually, is that 36 level. And then the low range of the previous week's low.
So you're starting off with the weekly range, and we're looking for basically a false breakout. So it's like, hey, we try to break the high. We're starting to turn around. Where's your 50% mark? That's your line in the sand, and then looking to see if we could complete an outside week.
Yeah, and there's no limit to what time frame you can use this on, because you could have even used it on this day. Like if you were to get your fib, this triggered the 50% rule on the day. So you could have actually entered right there at 38.50, anticipating this was going to become an outside day, and you would have been on the right side of time frame continuity this whole week. So that's an earlier entry and a way to also use it during the day. So
and I guess one point that I wanted to add there was this is a great tool, because you're basically taking advantage of traders that are trapped, right?
Yep.
They bought a breakout, they're holding on to that breakout, hoping that it's going to keep going higher in this case, and at some point they have to cut their losses, or they have to liquidate their position. And that's why this is so powerful, because it's a reactive strategy. You see the price action first, you see who's trapped, and then you take advantage of that. One thing that I like doing a little bit of too is so that's snap on the daily there. I maybe I'll show it on mine a little bit after, but essentially just measuring where that reversal starts. To me, that looks like close to about a 10% extension or 15% extension to where that 2 starts to reverse down. And that's something that I love doing as well. I'm going to show some examples there after. So So how do you know though which names you want to focus on outside bars versus others, or is it just generally you look at the broader market or whatnot? Because in general, from my trading, outside bars don't happen all the time, right? They're not a normal bar you see. I guess lately you've been seeing a lot more, but if you look at some of the weeklies and monthly charts for some of these indexes, it's kind of hard to get an outside bar there. So how do you determine which names you want to play that on? Or is it just more of scanning and seeing where the false breakouts are and then moving from there?
It's more been just me fine tuning my list over time. I just
Hmm.
have a go-to watch list.
Okay,
So this right here called Sarah's go-to list, I've whittled it down to about 60 names, 62 names, and they're just high volume, popular, traded names, good
gotcha.
liquidity. One ticker though that doesn't like to go outside a whole lot is Apple. I noticed usually I don't think it
Hmm.
likes to go outside a ton. Like you can see on the weekly chart, there's only 2 weeks where it has gone outside week in the past many weeks. So
Hmm.
Apple, and just looking at the chart and seeing if it does this from time to time, is helpful.
And that's so important because that's what I was wanting to talk about next is that like some back testing, some results around this. In general, like you said, some you need to know which names are more likely to give you those outside bars and which aren't, because you can't apply this to every single name. That's not going to be a winning strategy. I have a certain way that I like doing it. I'm going to touch on later, but generally, when you're going for this, do you where's your stop loss going to be? Do you just keep it at the high where we start to false breakout, or do you get a little bit more into the price action and go with a tighter stop loss?
Yeah. So futures are down. Uh yeah, so we do use multiple time frame analysis. So if I
Mhm.
want to give you an example, let's go to NQ on the daily. Let's throw our fib on there.
Mhm.
So once, we're looking at 3 to 4 time frames simultaneously at the same time because it sort of creates a domino effect and you can't really see it unless you're seeing it. You just
Mhm.
can't visualize what well, it's very hard for people to visualize what 3 or 4 daily candles make the weekly candle look like. So it's just easier if you have all your time frames pulled up. But for
Yeah.
instance, on NQ daily, when we opened, ticked up, took out the very tippy top of the day before, and started to fall back through, basically a green to red move. So we were green. Then we came back down, started turning red. That is when you'll want to start looking for an actionable signal on a smaller time frame to trigger the 50% rule to hit your target. And you'll see, look exactly like that's why outside bars are so powerful because it's such a high probability that it's going to usually go and take out the other side. And if it doesn't fully take out the other side, it's getting close enough to where you're going to profit and you're able to walk your stop down, even if it doesn't tick the very, bottom there, but it did. And that's where it stopped. So
Yeah.
that's why that's always our target. But if you want to go down to a smaller time frame,
Mhm.
you can look to enter. This is a bad example on the 15-minute. We opened up there, came down here.
And I have
Yeah, this was just a waterfall shot.
yeah, and I actually
So,
have a good one too. If we go to the SPY weekly, if you could pull that up.
oh,
Um,
here you go. Here it is. So go down. So like I said, we're using all the time
okay.
frames. So if you're a day trader, we're using the daily and down. So here is a perfect example of where we would have entered. This is a 212. So we're right at the 50 too. So we're right at the 50. So our short entry is that 14477 and your stop is going to be the high of that candle.
Got it.
So that's your risk reward and your reward is way down here. But that's your risk. That one candle.
So you're essentially looking for the price action around that 50%.
Yeah.
And if you can get a nice tight pattern like you have here, I see an inside. Is that an inside bar over there? A 1 right there.
Yeah.
Yeah, so you could even just take that breakdown of that inside bar. You have a super tight stop loss like you just showed there, and your
Mm-hmm.
reward is probably, that looks about 6 or 7 times your stop loss. So that's exceptional. And then I guess to show people a little bit more of why this is so important, if you can, you pull up the SPY weekly, and just so we could show a lot of people like what the power of these outside bars are. And if you look recently here, so
Ooh,
um, yeah, so right there, the bar was the 3rd of January. So basically the first bar.
that's where
Gold,
we've been short. Yeah, that whole time. That was also the top of the broadening formation.
yes, exactly. And this is one of the shorts that I took as well. And that just shows you how powerful a false breakout is.
Yeah.
And you
So
can
for
see,
instance, you would have entered at 475.51. If
mhm,
if you use the 50% rule.
exactly. And it's even better when you get these on the higher time frames, because you could see that like everybody in that outside bar was buying new all-time highs, right?
Oh yeah.
And then the moment it starts to turn around is when we can get nasty. And then look at that huge drop that we had right after that. So that is
Mhm.
so powerful to see. And I love how you align the time frames to make your risk to reward good, because at the end of the day, it's not going to work 100% of the time. It's not, but what it does is it allows you a sniper focus to get in, to get a good trade and have a good risk to reward. Do you generally always target the previous day or week's low, depending on where your outside bar is, or do you, maybe scale out some profits a little bit earlier? What's your general approach with that?
The first target is always to just become an outside bar.
Okay.
And then it depends on how far away the next targets are. So, like for example, so this is also something that we call a pivot machine gun. So this outside bar here, the previous all-time high before the fall apart, the first target is here. But then if it keeps going, I mean, you can scale out, you can keep adding, you can get out and get back in just to lock in profit.
Mm-hmm.
And then your targets are just the bottom of each candle. And if you look real close, that hit target 1, target 2, target 3, and then you ran out of time on that week. So it did hit target 4, but it took the next week to do so.
Mm-hmm. Yeah.
So it all depends on your time horizon, what you're looking to do, how close your pivots are. And when I have pivots that are or targets that are really far apart, I will go into the smaller time frames and use hourly targets.
Yeah.
If there's a big gap on the daily, like
And
between one.
one thing I want to talk about, and maybe you could talk about this as well, is that, in our community, a lot of traders are trained to buy breakouts. Like, oh, we're going to new all-time highs. Let's continue to just buy breakouts. But in the long run, if you continuously buy breakouts, especially with options, you're going to get a bad deal, because the premiums are always going to be expensive when you're buying, into strength, for example. So I guess this type of trading is more of a reversal style of trading when we're coming
And
back down.
for sure,
And
100%.
what are your thoughts on that? Like, do you see a lot of traders struggling with buying breakouts, or like, have you done breakout trading in the past? Like, how does this differ in terms of that? And like, how do you feel trading this way versus trading, your cup and handles and spoon and forks and things like that?
Well, I guess I'll give you a good example. So let's go back to NQ on the monthly, because I was looking at the monthly first
Mm-hmm.
when all that bad news war stuff came out. So the bad news happened, Russia, Ukraine stuff. We took out lows, and then we started coming back through. You'll see this. Oh, you'll see that little target there. We were anticipating an outside month last month, and we got it.
Mm-hmm.
So breakout traders typically would want to buy above this level, but that's where we're getting out, because we know from, well, down through this wick, once we get to the 50, we're probably going to come here.
And
And
break
then
it.
that level was 15,260. And when we hit it, That's it right there. 15,260. So that's why just to become an outside bar is the target. I don't expect anymore, but if we get it, you can hold on to your trade as long as it's still good. But you'll see as soon as we hit that, we just fell. So
Yeah.
that's why we're in from down here, right
Rather
in the
than the break.
middle, expecting to go up here. And so that's a tremendous trade. If you can hold through all this, that's amazing, but you know where your target is. So it gives you confidence to hold. You're not buying breakouts. That's exhaustion. That's where people are getting out.
And let's take that question to the chat, guys. Honestly speaking, guys, how many of you in here are breakout buyers? Hit me with a 1. Hit me with a 2 if no. But in general, when I first started trading, the way that I was taught, like what I saw on social media was like, okay, if this breaks, we're gonna, you have your rounding base, you have this base and that flag, and when it breaks, you want to go in. But most of us trade options here, and a lot of the times when you trade options, that's going to really put you in a hard spot. So Sarah, how have you seen the difference by trade? I know you trade options versus, this style of trading when you're right. So like when your trades are right, what could your returns be like here on when you hit your targets?
Ooh. Well, so the one thing I wanted to say about, oh God, I just lost my train of thought. Don't you hate that? Oh. Okay, so I was a breakout trader too, and the one thing that I that helped me so much was I quit using the words support and I quit using the words resistance, because to me, in my mind, resistance meant once we break it, we are blasting. So that was how my brain thought of it. But once I realized that was not what was happening, I started to replace the words resistance and support with targets. So instead of saying, this is my resistance, no, that's my target. That's where I'm exiting.
Yeah.
So that helped me psychologically a lot. And as far as knowing your targets, and especially playing with outside bars, you know what your targets are. So you're getting in when there's not a huge volatility spike. You're getting in not at a breakout, not when IV, blows up. And you can buy more out of the money. So your risk is smaller, but your percentage gains is bigger because you're buying things that most people don't think it's going to get there. But if you if you really start playing the outside bar rule, you'll see it gets there, and your percent gains they're like 10 baggers. You can get like a $30 contract and 10, 15 exit if you get in right. But you do have to pay attention to your time. Like, are you playing the monthly time frame? How much time is that going to take? You have to factor in time, of course, and especially with options. So that I noticed is what had helped me a lot. Using targets, getting out at my targets, not holding on to them, not wanting more. You can bounce around. There's trades all over the place, way more than we can even handle. So why get greedy? Just take your profits. Move on to the next.
That's so important, because if you get one good trade for the month, let's say you get in on a good 50% rule, you hit your target, because your risk reward is so good, you could probably lose the next 5 or 6 trades and still make money. Whereas if you buy a breakout and you're wrong, you're going to lose a lot. And if you are right, your upside is not that huge because you're already buying at the high. Whereas in a rule like this, you'd already be gone. You'd be long gone. When the breakout buyers come, you're the one that's selling them the contracts, and that's really eye-opening. And that's why I wanted to bring you on today, because I wanted to share with people that there's different ways to trade. And what it really comes down to is maximizing your risk to reward. And with a rule like this, it protects you because you are anticipating a move before it happens. Anytime you can anticipate something before it happens, you can make the most money.
Yeah. And the thing about breakout traders too, like they don't often have a target. I feel like they're just buying because they think they're going to get a big push, but that's not the proper way to plan a trade. You need all 3 things. You need your entry, your exit, and your stop.
Correct. So this is great. So what I'm going to do is I want to go ahead, Sarah. Let me show some of my examples. I actually took a few of these trades on April 1st, actually. So I have them written down here. So I'm going to share again here, and then we're going to go. So the first thing that I wanted to talk about is that point of reversal. So this is something that I use a lot. So here we go. Here's an outside bar on SPY. This is the one we were talking about here. So what I like to do is, so Sara loves to use the 50% mark. What I like to use is the 10% mark for the peak of the reversal. Okay, so here's a simple fib, the high of the low. So let's draw the 50% mark, which would be right around here. Okay, so there's your 50% mark. Let's put that in red. So what I like to do to add a little bit to this is kind of anticipating where we're going to turn. And a lot of the times it is this 10% amount. So this is not a fib, but it's just something that I've learned through just trading a long time, is a lot of the times breakouts will be about 10% and then they will reverse. So I like to use this 0.1, which is just a measurement here to help us to find that point of climax. So something that I was thinking, Sara, is have you ever like maybe got in earlier? So saying like, hey, well, let's start shorting this outside bar potential up here in this area rather than the 50%. Have you ever considered doing that before, or have you done that before in any other trades?
We do that all the time. You just don't see it in this way because we always have a target. So and the target is all, I'm pointing at the screen like you can see what I'm pointing.
Oh, right here, 427.07.
Okay, so on a smaller time frame, that top of that candle wick before the 3, that's a target on a smaller time frame. So once we have hit that target, that's when we start looking for reversals back down.
Yes.
Because that's always the target. So that's that. Yeah. So it's basically
so right here. So right here. So here's an example.
Yeah.
So that's that 10% right there.
Perfect.
Yeah. So
So you're at the highs. So that's your target. So there's no more price. So you're exhausted. So that's when we will look for reversal. We would take what's called a 2 up, 2 down, which is enter right when that red bar breaks the green. Yep.
Yeah. Gotcha. So I guess my way of doing this is I like to I like to go in blind. Like, so as soon as I have limit orders, so as soon as it touches the 10%, I'll short right away. And the reason I like doing that is because I know what my risk to reward is going to be. So as an example, I could just short right here on the 10%, and I could put a stop loss above the 50 on the other side. And that's something I wanted to talk to you a little bit about today too, because I know you love the 50% of the candle, but the 50% on the other sides as well, I think are really powerful. So for example, the 50% extension to the upside. So it could be where your stop is if you want to get in blind like I do, but also the 50% to the downside of this candle. So adding 50% more down here could also be a next target, for example, because I love using the fibs as targets. I know you guys use the actual candlesticks, but I just like to use measurements. So my targets will be, the first one will be at this low, and then 10%, 20%, so on and so forth, all the way down, and just have them layered out, and then it just goes and flushes right through.
Well, yeah, and that's a great way to, utilize that profit taking.
Yeah. And most of the time I like to do these automated, because I feel like if we stare at the chart as humans, sometimes we get emotional, we do dumb things.
Yeah.
So I'm going to show an example of that. And let's look at this one together. So this was a trade that I took together with my members and stuff in my room. And it was Procter & Gamble on April 1st. So this is going to be, I want to get your thoughts on this because this might be a little bit different. But here is April 1st right here. So I'm going to hit the replay. And boom. Okay. So if we go to the daily, so Procter & Gamble on April 1st, we had an inside bar.
Okay.
So I like actually trading these reversals off of inside bars because right after an inside bar, if you have an outside bar, then my indicator will open the skies and the blue light will come down and Poseidon's waves will come. And we call that a nirvana, right?
Yeah.
So I like playing for a nirvana. So you guys are playing for your outside bars. I like playing for nirvana. And the reason why is because I find a lot of the times with these inside bars that they can go both ways really quickly because the bar is so small, relatively speaking to everything else. So I'll give an example here of Procter & Gamble. So let's go down to the 5. So this was a trade that I took. I think we did about $1,000 in profit on this one. So let me walk everyone through this first. Okay. So what I like to do, draw the previous day's high and low, as a reference. Okay, so here's your high right up here, and then here's your low right down here. Okay, so you let the first bar come in, boom. So there's your first bar. All right, so what does an outside bar actually look like on a lower time frame? Well, what it looks like is we're going to break the high here and we're going to break the low. Okay, so once those two happen, we're going to have an outside bar. So what I like to do here is I take my fibs and I stack them. So I stack it on the high to the low. So now I have measurements everywhere. Okay, so what I am concerned about is when we are below the low or above the high, now I'm looking for my 10% mark. So in my 10% area, I'm looking for that reversal. So let's go ahead and watch Procter & Gamble. So boom, Procter & Gamble, it breaks the low. Okay, so it breaks the low. And this is the first sign of your outside bar. Okay, so we come here, we tag the 10%, the 0.169, and then we reverse. So that's half of the bar is completed there. Half of the goal is completed. So now in your situation here, this 50% mark is where you would be coming back in now to complete the outside bar on the other side. So what I like to do is actually something a little bit more later in the game is using the 786 Fibonacci. And the reason I like using the 786 Fibonacci is because I find that generally, if we hit this one, we're going to break the other side from a day trade perspective. So this is all happening on the same day, right? So we could go ahead and we can watch this here. We get your 50, we pull back a little bit. Okay, we even double bottom. Okay, so we double bottom, and then later in the day, we start to get power. We break back up through the 50, we break through the 786, and there is the completion of the outside bar right there. So
I bet that was not a fun trade to sit through.
Well, you see, I didn't get in until this line up here. So this one, I wait for the 786 because I feel like it's a little bit closer to the high. And then if it hits that, I'm pretty confident it's going to go and pierce through the high. But what I wanted to talk to you about here is, have you ever considered, so coming in on the 50, then adding on the 618, adding on the 786, adding to winning positions? Because that's something I do a lot. And I think maybe could even enhance your strategy more. So for example, once that play is working on the 50, you can come and add more on the 618, on the 786, because you're basically adding as you're getting that confirmation. Is that something you guys have looked into before?
Oh, we definitely do.
Got it.
We add, but we're not based on fibs. We add after we get corrective activity.
Got it. Okay. And that would be, you know, just particular patterns on like lower time frames and stuff like that.
Yeah, just pullbacks. And, you know, so on a big, you know, strong green day, you're waiting for corrective activity. We don't use this term, but you're waiting for a bull flag to happen and then a reversal back up.
Yep.
So yeah, we do. We start smaller. We don't go full size on our opening positions, unless obviously you're a scalper and you're trying to just make a whole bunch of money real fast. But
yeah, and what I like to do is just basically treating each one of these trades like independent trades. So for example, I can go long on the 786, put a stop loss on the 50, which is here. I could also go long on this 90% mark, which I like using, put a stop loss on the 50, and just basically treating each one separately as its own trade, because it's basically waiting for that extra confirmation. So I also love using these 90% marks. And I think we've talked about this in the past about, you know, getting close to the edges there. But obviously, if you look at this chart, the best place for you to get in is obviously going to be down at the lows, where we start to have a pattern. And we can clearly see like this double bottom pattern here, your 0.169 extension, and then we start reversing and pushing through. But and then if you go back to the daily chart, then we end up closing like this. And you'll see, let me remove these drawings. You'll see the completion there of the outside bar there. So this actual pattern is happening on all the time frames. That's what makes this amazing. So if you're a swing trader,
Can I tell you one thing though? So the reason I would not have taken this trade to the short side in the first place though, is because it would have been full time frame continuity green on the other time frames.
Got it.
So just because it's an inside bar doesn't mean that I will trade it short.
Got it. And that's a good point. So I know you guys use time frame continuity. I don't. When I'm day trading, I don't, because I'm just trying to go in there and get in and out quickly, lock in my gains, and just like I have no bias. But definitely, yeah, the higher time frames, using that multiple time frame analysis, that's great. That's excellent. So I guess so from here, that's an example that I did in Procter and Gamble. I don't really get a lot of these reversal strategies on a monthly basis. I'll probably say maybe 5 times a month I'll see a reversal play like this. How often do you trade these setups?
When you say, what do you mean when you say reversal play?
Like when you're looking for the outside bar to complete, are you looking at these every week? Are you looking for the 50% rule to trigger every week? Or are you, like for me, I wait for the inside bars to close on the daily, and then the next day, most of the times you're not going to get a complete outside bar formation. A lot of the times it's just going to be a directional bar, either up or down. But I've seen these patterns actually happen maybe 4 or 5 times on a monthly basis. Looking at like the broader market. So are you actively hunting for the outside bar completion and the 50% rule on a weekly basis?
Usually when I'm looking for them, it's happening on a Monday night in anticipation of turnaround Tuesday, basically.
Got it. That's
So on
so that's so
Monday is
cool.
when I'll look for my red 2 ups
Mm-hmm.
and then see if it's if the 2 down triggers, is that going to put me at least close to the 50% mark, and then potentially to become an outside week, because then that gives me an excellent day trade the following day. Or if you want a weekly swing and you want to buy weekly expiration, that is a great trade because it's happening so early in the week. So I love to look for them on Tuesdays.
Mm-hmm. So you'll buy the same Friday expiry. So basically you have 3 days for it to go and hit your target.
Technically 4, but yeah.
Yeah, 4 days. No, that's amazing. So I like that a lot. I never considered the daily part of it, but a lot of the times we do have false breakouts on Mondays, right? Because there's a lot of eager buyers, there's a lot of eager traders, and sometimes they get the wrong side of the coin on a Monday and they end up buying false breakouts. And then for the rest of the week, if we start going lower, for example, we can definitely have a rug pull that goes into the later of the week. And it's the same thing the other way. If we
Mm-hmm.
end up on a Monday going red and then completely reversing by the end of the day, we could set up that, hammer bar that goes into the rest of the week.
Mm-hmm.
Perfect.
Yep. Because Tuesdays, it's what can continue the color of the weekly candle, or it's what can change it. And that's where the time frame continuity comes into play. So if Monday you have a green candle, the weekly candle is also green. But on Tuesday, if you get a reversal and you get a red candle, that's changing the color of your weekly candle from green to red. So that's what we will also play. It's like a continuity flip.
Got it. And then when it goes from green to red, you're basically essentially saying that it's going to close red by the end of the week. So you're playing for that continuation of that flip.
Yeah.
Wow. And that's amazing. And for some newer traders, this might be a little bit complicated, like the topics we're talking about here. But this type of trading here, if you put your time behind it, it'll definitely open your eyes to see what happens a lot in the market. And a lot of the times, it's false breakout after false breakout after false breakout. A lot of the times that happens, especially when we have a lot of news and a lot of different things happening. That can happen. So Sarah, where can the people find you? Let's take some questions here in the chat. And I know we said 30 minutes. We're already at 40. So where can people connect with you? I know you have your YouTube channel. I follow you there. We have your Twitter, obviously. But what else are you working on these days?
I am working on something with Alex Options.
Got it.
So the link to it's a Discord, the link to the Discord. Oh, yep, there
Yeah.
it is. It's
Mhm.
in my Twitter bio.
Right there.
Yep.
Got it.
And that's it. That's where I'm at these days. I have one question for you, Rich. What do you
Yeah.
call a double outside bar pattern?
I don't have a name for that. Yeah, I don't have a name for that
It's
one.
my favorite.
Double outside bar. Yeah, it's a very
Yeah,
rare one.
because the
I actually
range is
love
so big.
I love trading the double outsides on like a 1 minute chart actually, because
Oh,
it's so rare, and it gives you a good range to play off of when you have that double outside. I actually did one last Friday. We did not last Friday, sorry, the Friday before. We did a live trading stream on YouTube, and we got a amazing double outside bar on SPY on like the 2 minute chart or 1 minute or something, and we just took that short, and that one was just like a massive sell off. So I don't have a name for it because we don't really see it, but. So do
I
you
love
play
them.
that from like the weekly perspective as well?
Any of them.
Yeah,
Like
I think there was
SPY
one on
monthly,
Spy.
QQQ monthly. Like we knew all like for half of the month where we were going. So
Right here.
it's just
Mhm.
yeah.
Gotcha.
It happened twice. See?
Yeah, that's
The
crazy.
two, yeah.
The last time I mean, we've had double outside bar months, but never so close in proximity. So that was really good. Really happy that you were able to capitalize on this, because I know a lot of traders were getting destroyed in this time.
Yeah. And
Yeah.
that's what it's what we're here to do. We're here to help them and teach them what outside bars are, how to play them, how to benefit from them, when to take your profit.
Yeah, no. So guys, check Sara out. Sara has done a lot for the community. Very happy to have her here. She has so many guides. Here's her Google Doc guide. Check her out there. And then like Sara mentioned, you could find her in the Discord over here. And she's a great person. And really want to thank you for being here. And we'll continue to get some more examples and more info we can keep sharing with the community.
Yeah. And I did want to tell anybody, if you wanted to kind of take a deep dive and learn about the strat principles, there's quite a few of them, good handful of them. I've made a playlist on my YouTube channel, and it's called Stratucation, a little spin off of Strat Education.
Mm-hmm.
And then there is also a playlist for the combos that we play. So like a 2-1-2. I have several videos on the 50% rule. So if you're interested in learning more, they will be found in my playlist.
Yeah, and I'm really, really happy that you were able to use some of the fibs. I know a lot of people in my chat, we love using Fibonacci because it's a number that's set in stone. Like, 50% of the weekly range is 50% of the weekly range, and that's it. And that helps out so many traders because it removes the ambiguity and it removes, all the complicated parts of it. And that's why I like using them for my targets as well, because it's, hey, we're going to use the 10% as a target, or the 272, and that's it. Once it gets there, we're done. And it really helps to just make things clear. So really happy to be a part of that with you guys. And hopefully we can do another collaboration soon.
Yeah. I'm down anytime. And I love that you guys use fibs. I'm not against it in any way, shape, or form. If they're drawn right, if they're drawn from the low to the high, they're amazing because algos do use them. So you are going to see, price react to those levels. So
definitely. I mean, when you're programming a robot, it's just literally math. It's all math.
There's
and
no
that's
human
what it comes
there.
down to. Yeah. So thank you so much again, Sara, for being here. Looking forward to collaborating with you in the future. 50% rule, guys. It's awesome. It basically combines the strat and Fibonacci together. And that's really amazing. So we will cross paths again in the future. Hopefully I'll get on your channel next and we'll do something there. But enjoy the rest of your day, and thanks for being here.
All right. You too. Thanks for having me.
All right, guys. Thank you very much. Boom. So there we go. Sara, thank you so much for being here, guys. Sara was here. Hit me with a 1 if you enjoyed having Sara here. It was awesome having her. She was great. And, it's amazing to see traders just get evolving. We all evolve over time, and adding the fibs to her trades really helped out a lot. And it was really good to see her to doing that. And it was fun. It was really, really fun. So guys, what we need to do now is we need to do a few giveaways, and we'll wrap it up here. So hit me with a 3 if you're ready to do a giveaway. Let's get that done right now. So the first giveaway that I'm going to do is going to be on one of the YouTube comments. So for the videos, you're going to get a book and 1 month free in the room, so you can trade with us live tomorrow. So let's go ahead and do that. Trading Wars. So here we go. Let us do, which video shall we do? We are going to do this video here. So right here, guys, the perfect Fibonacci trading for beginners. So we have 35 comments in here. Let's get the random number generator out. Random number generator, boom. And then let's go ahead. Number 1 to 35, 3, 2, 1. Boom, number 7. Okay. So 1, 2, 3, 4, 5, 6, 7. Let me count that again. 1, 2, 3, 4, 5, 6, 7. So there we go. Hoodie LP25. Hoodie LP25. Thank you very much, my brother, for your comment. Very much appreciate the comments, guys. The channel has been growing very quickly. So thank you so much. Hoodie, please DM me on Twitter and we'll verify you and we'll get you your book and your 1 month for free in the room. So thank you very much. All right, Hoodie, appreciate you there. And who else do we have here? Let's do a giveaway for the Trading Wars Army members right now as well. Let's go ahead and do that for the Trading Wars Army. So let me go in here. I definitely think the 50% rule is very key. I love stacking fibs. So I will hit it on the 618. I will hit it on the 786. I will hit it so on and so forth multiple times once I start to see that we are creating the pattern. And the reason I like doing that is I like adding to my winning positions when I'm right, because when you're right, you're right. And when you're wrong, you're going to lose. So there's nothing you can do about that, right? So you got to try to make as much money as possible on your winners. Okay. You got to try your best to do that. All right. So here, let me go ahead and let me find our members here. So members. Okay. So we have, how many Trading Wars Army members do we have? We have, one sec. We have 88 members. Okay, so I'm gonna go ahead and pick another random number generator from here, 1 to 88. So let's go. Boom, number 10. All right. So we gotta go back in time for this one. We gotta go back to the old school followers. 4, 5, 6, 7, 8, 9, 10. All right. So we have a winner here. I will take a screenshot here. Boom. Andrea, I don't think she's here today, but Andrea is a very lucky person because she won another giveaway not too long ago. So Andrea, you are the winner. Go ahead and DM me and we'll get you all set up. All right. Thank you very much. All right. So there we go, guys. It was a great stream. I had one more example to look at. If you guys want to hit me with a 5, if you guys want to look at one more example, and we can take a look at that. So the last example that I had was, it was cat. Okay, so let's look at cat together. All right, and it was on April 1st as well. Okay, so same concept goes here, guys. So if you look at this cat on the daily chart, we had an inside bar, right? So we had a tight inside bar. So what we're looking at after this, guys, is we want to see what happens in terms of the breaks. Okay. So on cat, we actually went ahead and did the reversal play. So the basically looking for it to become an outside bar. So I'm going to go ahead here and I'm going to draw the high like right here, and I'm going to draw the low. All right. So we're going to watch the price action of the bar. So it's down here actually. So that's 930. Okay. So here we go. We have an inside bar. You could see it's an inside bar because this is the previous day before that. And then you could see the inside bar. We have this tight little choppy range here. And we're looking for this to basically break out. So here we go. Boom. We start off in the middle of the range. Then we break up. Okay. So this part here is your first sign that we could get an outside bar. So if we take the fib from the high to the low, you can see it right there, right? Here's your 10% extension. So what I like doing is once we get this false breakout right here, now I'm looking to short right here on the 786. Okay. So this is also called an A trigger for me. So I like using all of these fibs. So 618, 786, and 90, all three of these on the way down, like boom, 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 hitting it like a waterfall. Okay. And essentially what I'm looking for is this, an A. So what does an A look like? Well, we break the high first. Here's the top of your A. And then we come back down and break the low. That's my A trigger. So I like to look for an A on the chart. That's what I'm trying to make form here. There we go. There's your break. Boom, boom. There's your targets. Done. All right. So that's one of the trades I actually took. Cat. I took this one. I think, let me see how much profit we made. Yeah. So this one was about 800 bucks in profits. All right. So that's an example of the A trigger. All right. Hit me with the 3 if that makes sense. Hit me with a 3 if that makes sense. So I guess the only difference is Sara would be looking a little bit earlier, which is right here on this 50. But I like to be a little bit more conservative and wait until it comes a little bit lower, because once it gets into the danger zone that I like to call it, which is near the lows, I'm anticipating that we can just flush. Okay, because sometimes I do see that we do hit the 50 and we can bounce, and that scares me a little bit. But we can also have amazing trades like this. All right, so there's your A trigger. All right, so we had a chart request from a Trading Wars Army member, our brother right here, G. He wants to look at HD. If you guys, let's do about 5 chart requests and then we'll close off the night. Okay, so let's look at HD, Home Depot, right? So here we go. So here was it there on the daily here. Home Depot was one of our bonus picks that we posted on Friday. We had that outside bar, which is one of my criterias to help me for the bonus picks. We just broke through, bam. So that was a beautiful, nice little breakout on Home Depot. If we look at the weekly here, we don't really have any patterns in terms of like outside or inside bars, but we do have this little double bottom pattern here, which is basically just a Fibonacci extension. So if we just go to the last swing high, which is right here, and then we take it down to the low, we had this 50%, and we came very close to the 10% right here. Okay, so we did bam, bam, bam. So that looks like some algos maybe front running here and getting in a little bit early. But yeah, nice little play there. This low is something to watch, and just look out for earnings coming up April 22nd. So you know, with earnings, anything is possible. So just be careful with that. All right, so what else do we have? QQQ from Happy Hookers Fishing. What's going on, brother? Yeah, so you know, QQQ, this is where we need to just focus here on the weekly. And we had this just impressive. This is a big Fibonacci leg. That's all it is right here. So you could see that we had that push down, right? We pulled back up right to the 50618 area, and there was a little bit of front running. So the algos front ran a little bit here, but pretty much this is a line in the sand now. So this high is the line in the sand, and if the bulls cannot get above this high, if they can't turn around and break above this high, then basically we can just continue to go lower, or we can just go sideways. So that is the line in the sand that we need to watch now, because this is where the bear algo has came to play. Okay, so let's look at a few more. AVGO. I don't see any patterns here on the weekly or the daily that I would be looking at. I do see a short fib from here, high to low. We came 786 rejection. Okay, and then now we can draw the other side for the bulls and look for potential dip buys. It would be on the 5618 back down into this area. Okay, so it's just a fib on a fib there. SPY. So SPY is the same analysis as the Qs, literally the same analysis. If we were to go ahead and draw that right there, go from high to low like this, literally the same thing. It's just that how deep it goes between SPY and the Qs are different because there's different stocks in the basket. Okay. Let's look at NVIDIA. Yeah, so we never got filled on our long in NVIDIA. We were looking to take NVIDIA long right around here. So it never filled us yet, which is good because it went ahead and went down. So I'm just happy right now to be on the sidelines. And one thing that I did notice is earnings is on the 25th of May, as well as there's a short week coming up right now. So until we get back to my trigger, until we get back up there, I'm not going to be interested in playing NVIDIA, because we could just literally just chop here. And you can see that we're forming an inside month right now. Could close as an inside month. In that case, if it does, I will reassess and look at it again. All right. Boom. There it is. Another week in the book, 7 days a week, 7 streams. That's how we do it every single day. We try to get better. We ignore the haters and we keep going. Okay, and I want you guys to do the same thing. I had a great week last week. I had one loser. That was it. Only one. You can do that as well, guys. Master this game. Okay, it's the same patterns that happen over and over and over and over and over and over and over again. They do not change. It's the same thing that happens over and over again. Okay, so listen to me now closely. Become a master at what you do. Stop playing games. Become a master. Focus on what you want. Focus. What does focus mean? Focus means you take the Hennessy and you put it under the table. That's what focus means. You put the Hennessy under the table, you open up the charts, and you dig in. You drill in. When I say dig in, I mean dig in. Dig in. Get your back testing done. Okay? Get your back testing done. Do 100 trades. 100 trades. That's what I've done. For every single strategy that I've traded, I've done 100 trades. And if you haven't done 100 trades, then you shouldn't be commenting on anything about what you think. Okay? It's not about what you think. It's about what the chart tells you, what the patterns tell you. Okay, that's what we're gonna do. So we're gonna finish this week positive again. We're gonna rock and roll, and we have a dream to be on the top because we come from the bottom. And only when you're on the bottom can you enjoy the time on the top. Okay, so thank you very much, my friends. I will catch you again tomorrow. I love you all. Please do comment, like, subscribe. Let's take it from there. Take care.